All right, folks, we're going to get started here. And today's panel, the focus is silver. So just a real quick show of hands, how many people in the room actually hold physical silver in their investments? Okay. Oh, there's room for more. How many people in the room own at least one silver stock? Okay, good. We're in good company then. So I'm not going to bore you with the fundamentals of silver for 40 minutes because we got an exciting panel here today. I'm joined with Andrew from Blackrock Silver, Michael from Aftermath Silver, and Mark from Silverco. And so we're going to dig mostly into company fundamentals and some of the value drivers for the company. But I think we should at least give silver one question. So I'll throw it to you guys this way. Well, let me just put it this way. Silver's been on a wild roller coaster ride. As we all know, it took 4 decades to get past the $50 ceiling. We saw that happen in 1980, 2011. And a lot of people thought when it got to $50, there'd be some resistance, that it'd be a little bit of a knife fight at the $50 level. Instead, it shot through it, got stuck at 54 for a couple of months, and then blasted on through to triple digits. I don't know if anybody was at the Vancouver conferences to kick off the season at the VRIC or at the MIF, but they were literally calling from the stage the silver price in between talks. And they were giving, like, hey, so-and-so's coming up next, but by the way, gold's at 5,100 and silver's at triple digits. So you could tell it was getting a little frothy. Obviously, we had the big fall from grace at the end of January, the last day of the month, where it just took an elevator trip right down to $64 on the futures. Bounced around through January and February, bounced around, took a nosedive down in March. And now people are crying in their beer because silver's in the 70s and 80s. I think most people, when you looked at your project years ago, would have been thrilled with silver in the 40s or 50s, much less the 70s or 80s. But my question to you all is, do you think the bull market's over in silver? And if not, what is the fundamental reason or pricing reason or sentiment reason why you think we're still in a bull market? Andrew, you chuckled first, you're up to bat.
Well, I mean, it's about time horizons too. But I mean, the most important factor, I think, for silver, just in the recent past, is the move from it going as primarily a monetary metal to now being largely industrial. 65% of it is actually consumed. Solar panels, photovoltaics, the whole AI electrification. It's now referred to as the electrodollar because everything that's powering the world requires silver. So what's being mined is being utilized. It's being disposed of. It's being taken off the market. So the COMEX has been effectively drained. People are standing for delivery. It's been a fundamental wrench thrown into a system that has been gamed by the bankers for decades. The last time my project was pumping out gold and silver in 1929, it was 28 cents. It hit $120 last month. Just 6 years ago, in March of 2020, when we signed our deal to get our project, silver was $12. By the end of that summer, I think it was like 30. So you're going to get a lot of, the volatility is, it puts some hair on your chest. It's a wild ride, but that's also where the money is made. But ultimately, at the end of the day, if you can't make money, if you're not jumping for joy and doing cartwheels at $70 silver, $80 silver, you've got the issue with your project or your operation. At 100, 150, that's gravy. But I think the best is yet to come.
Keep on heading down, Michael.
Yeah, I agree with a lot of things that Andrew just articulated. I will add that we're in the 6th year of a silver deficit. And when I originally put Aftermath Silver together, I was looking at the industrial use too. You could see the way the trend was. And I think at the time it was 50% industrial, and now it's up to 65. And I think that's going to continue to increase. So I will say this, there's probably, 200 really good gold companies globally. There's probably 20 really good silver companies. So we play in a smaller space. So when you do find a good silver asset, and to kind of Andrew's point, if you can't make money at these silver prices, something's fundamentally wrong with your company. When I was negotiating on our big asset, Barranquilla, silver was $18. And I remember in our boardroom saying, if silver goes above 30, that's going to be fantastic. And here we are at 75. Our last resource that we did in November was done at $29 silver. So I think the price is fantastic. It's definitely bull market territory. But my largest shareholder is Eric Sprott. And Eric is, I think, one of the best silver investors globally. And Eric is still calling for $200, $250 silver in 24 months. And 2 years ago, he was calling for $80 silver at the end of 2026, and he was correct. You know, I think from a company point of view, we sometimes tend to go the other way. What happens if silver goes to 25? Do our projects still work? And I think that's an important question that everyone in the audience should ask the silver companies.
Yeah, all great comments by Andrew and Mike. I'll just reiterate, very few companies in the silver space, big supply deficits. Everybody talks about silver equivalents, and the deficit's really from silver. So there's a lot of projects that in the silver space that come with base metals. So often they are 40 to 60% actual silver, which doesn't help the supply issues. And in terms of, I'm not going to reiterate everything here, but in terms of where I think we are in the bull market, probably a guy like Don Durrett is a better gauge of that than I am. But yeah, I think we're just getting started.
Well, I think even Don agrees. Triple-digit silver is back on the menu again. So I think everybody in the room is probably bullish on the precious metals, or you probably wouldn't be here. And there's a lot of fundamental drivers, macro reasons why the metals can keep going higher. If gold goes higher again, silver will also track that, but it has its own industrial component. But I really want to dig into the company fundamentals here. So maybe just to kick us off, just a quick teaser on where your project is, what your jurisdiction is, any jurisdictional advantages you have, or infrastructure advantages, and then what metals mix you have. So each of you, I know all three of your projects has a different metals mix. Everybody has silver, but then they have other metals. So where are you at? What infrastructure advantages do you have, and what metals are in the mix?
For me? Yeah, sure. So Blackrock Silver, we're in the process of reawakening one of the greatest American mining camps. If any of you have been to Nevada, which our project's located on, it says, "Welcome to the Silver State." It's called the Silver State because of our district. We're about a 3-hour drive from Vegas, 4 hours from Reno, and our entire project's on private land, which means in terms of permitting, we're looking at one of the most truncated permitting process you can get. In fact, you know, we only made our discovery hole less than 6 years ago. It was summer of 2020. Here we are, we're getting the project permitted right now, and we're gonna be, well, just last month we put out a PEA, which outlines an operation that's gonna be producing about 7 million ounces of silver equivalent a year at about $1,750 all-in sustaining costs over 11 years. And right now we're in the process of getting the permits in place so that by the second half of next year, the big yellow trucks will be showing up at the project to start working our way underground to the system and staring these veins in the face for the first time in 90 years since gold and silver was last pumped out of there. I guess in terms of your other question was the mix. This is a pure play precious metals deposit. Really, it's a really high-grade gold system with an unusually high amount of silver. Historically, in 30 years of production in our district, 400 million silver equivalent ounces were produced, and they was producing at 100-to-1 silver to gold ratio. You know, so that's what they're pulling out of the ground. In terms of our base right now, I think at our PEA, which we just released, at $31 silver and $2,700 gold, it's about a 60-40 silver to gold split. Ultimately, you know, what that'll be when we're actually pumping it out is that's just a function of the price we're selling it. So silver's been just in the last year between 105-to-1 and 55, 60-to-1 right now. So who knows what that actual number is going to be, but at the end of the day, our pesky byproduct is gold, and that makes for really straightforward, easy metallurgy.
And Mike, I just want to ask you before you start, are you a silver project with amazing credits for copper and manganese, or are you a manganese project with amazing credits for silver and copper? It doesn't even matter.
I can be anything you want me to be. You know, it depends on the metal price. So we have three co-products. We have silver, with 144 million ounces, and we can grow that larger. We're probably looking right now at a 25-year mine life. We have 1 billion pounds of copper, and we have 3 million tons of a metal called manganese. Now, the type of manganese that we have is, it's an oxide. An oxide manganese can be used in high purity batteries for the EV industry. And so we have those three projects. So the thing with manganese, like a lot of critical metals, it's all processed in China, 92%. So if we send our manganese to China, we are actually a silver dominant company it forms the majority of our revenues, and manganese is secondary because the Chinese pay $1,000. What we are looking at in conjunction with the US government, it looks like we're going to process that manganese in the southern US. And then if we do so, we'll be using $1,800 to $2,500 a ton for the manganese. The manganese actually supplies the majority of, the majority of the value. It's not that silver's diminished, we just get that much more revenues from the manganese. But we also have 1 billion pounds of copper, so we can be one of the bigger silver producers at low cost because the copper will offset it. We can also be, it looks like we're going to be the largest high purity manganese producer globally at potentially the lowest cost. But what the silver does give us, we can produce 5 million ounces of silver for the first 6 years while the manganese is going through its offtake agreements, because it's not a metal like silver or gold or copper. It takes up to 2 years of testing to make sure it can work in the batteries. Most companies cannot afford 2 years of no revenue when they go into production. We can, because we can ramp up our silver. So it's a unique mix, and it gives us flexibility, and I describe them as co-products.
And your metals mix, where you at?
Yeah, great. So we're Silverco Mining. We're really new to the market. So our ticker is SICO. We've also listed on the OTC as SICOF. We've got 2 projects in Mexico. We are Mexico's newest producer. In fact, we're producing this week. We got 2 projects there. The one is producing, the other one is restarting. We'll restart that later this year. We've got 2 assets that are capable of producing upwards of 4 million ounces or 5 million ounces of silver within the next 12 months. And we've got a mix of silver between the 2 assets combined. We're up over 80% silver. And we also produce a bit of lead, copper, and zinc.
So I think you see a nice mix of companies here. All of them have a lot of silver. Maybe just talk about the resources, how much silver you actually have. Some of you guys have a lot of silver, and the 80% exposure to silver is an interesting angle. You don't see that very often. So maybe just how much silver do you have?
Yeah, on our basis, on a global basis, between measured, indicated, and inferred, I think we're about 53 million ounces of silver and about 670,000 ounces of gold all in. But it's the grade profile. This is the highest grade development stage silver asset in the world that I'm aware of at this point. We're, in terms of head grade, you're going to be mining something that's right around that 0.5 kilogram per ton silver equivalent. And because the metallurgy, just gold and silver in there, you just crush it, grind it, and then you're left with gold, silver, and beach sand pretty much. It's going to be one of the few projects that can be a doré at site effectively. So not only do we have the grade and the ounces, and we're showing significant growth. I mean, hell, we started with 0 drill holes in our database 6 years ago. Now we're up to about 123 million silver equivalent ounces. Anyone looking at our resource model right now can, without any leaps in logic, daylight about 200 million. While we're waiting for our permits to come in this year, we didn't want people to get bored. So our moonshot this year is, the last year or so was focused on mine expansion style drilling, growing bolt-on mineralization to our existing mine plans. This year it's about taking a big swing at bat. So we're stepping out 800 meters along the vein zone on multiple modeled vein extensions, which anyone that's drilled out, epithermal vein zones before, most people talk about 50-meter step outs or 100-meter step outs. We're going nearly 1 kilometer. You can barely see the drill rigs in the distance from where the last mineralization is. We hit those. I mean, that's the moonshot. That's where we go from 200 to potentially 300 or larger and make it truly, something to watch, I think. Yeah, it's been a wild ride.
We'll be watching.
Yeah.
How much silver?
In Barranquilla, our flagship asset, 144 million ounces currently, and 125 million of that's in the measured and indicated category. 20 is inferred. In our secondary project, Chayacoyo, we're sitting at 35 million measured and indicated with a further 10 million in inferred. And then we have a third project that's non-core that's around 20 million ounces of silver. Our silver equivalent at Barranquilla, if we or process in the United States, is 500 million ounces. And if we process in China, it's about 350 million ounces.
And those silver numbers don't include the copper or the manganese, correct?
The equivalents do, but the first ones I gave you don't. They're pure silver.
Yeah. Silver in the metals mix, huh?
Yeah, so at Minera La Negra, that's the asset we're closing on this week that's currently producing. Still requires some ramp up. I don't have a technical report on it, so even though it's a producer, I'm a little prevented from giving some forward-looking statements. But on a historic base, if you look at what's a historic resource, it's about 45 million ounces silver equivalent there. We see a lot of exploration upside. This is a polymetallic skarn. And historically, you've seen much higher grades of silver. So we're about to kick off on a 20,000 meter drill program at Minera La Negra. Cusi, which is the asset that we're restarting later this year. We went public on that. Privately, when we drilled 20,000 meters of drilling privately in 25. We increased the historic resource by 30%, increased the grade by 20%, and the tons by 10%. Currently, that resource sits globally at 73 million ounces. 41 million ounces of those are in the measured and indicated category, 262 grams per ton silver. There's some really good exploration upside here. We've kicked off a 30,000 meter drill program at this site. Quite excited about a couple of areas. And not to get too much into the details, but we consolidated some ground at a target called San Miguel. When we drilled that privately with really few meters, I was arm waving saying that would go to up to 20 million ounces. It's already at 27 million ounces and has easy potential to double. And then we have an exploration target called San Juan. We stepped out 600 meters, which, as you heard earlier, is a massive step out. We hit 4.3 meters at basically $500 gram silver. And we are infill drilling that right now. If that hits, it's probably on the order of another 15 million ounces. So at the end of this exploration program, we should have a significantly larger resource than today. And like I said, that asset will restart later half of this year, ramp it up through into next year, and have a lot of material to feed into the mill.
Okay. Now, some of you have alluded to some of the value drivers coming down the pipe for your company. I want to really focus in on that on this question, like what the key catalysts are that are going to drive the value. As investors in the audience, I'm always wondering, like, what are you going to do next? And investors are impatient. So you guys know this, like, what's the next thing? Even if you do a great press release, the very next morning they're like, so what's next? So what is the big value driver or drivers that you really want investors in the room focused in on that you think is going to help the company keep re-rating higher? This time we'll start with Mark.
Yeah, sounds good. We've got a very good team. If you look at the top 5 performing silver assets in the last decade, we had senior executives from Silver Wheaton, or Wheaton Precious Metals, I guess, Mag Silver, Silvercrest, lots of great experience in Mexico and builders and operators. We're going to have a very heavy news flow. We have 2 assets. One we're closing on this week. It's in production. We need about 6, probably 4 months to ramp it up to the current 50% capacity up to nameplate. At Cusi, we're going to restart that later this year. We'll be ramping that up. In addition to those things, we've got 50,000 meters of drilling. We'll have lots of news flow. And in the next 12 months, we'll be looking forward at a production profile somewhere on the order of 5 million ounces a year, and at current prices with a margin of something like $50. So really the big excitement for us is cash flow generation. And you can look at our valuation today. On that kind of basis, we're very cheap, and we're going to have a lot of news flow to keep investors on their toes.
All right. Maybe just a quick round of applause for the newest producer of silver. Just this week. As Michael said, there's not many companies pulling the silver out of the ground, so just nice when a new one is birthed. But Michael, key drivers for Aftermath, key things that'll re-rate it higher.
Well, we just put out, I think, an hour ago, what do we hit? 450 grams over 43 meters. So we're pulling silver numbers like that right at surface. We're currently halfway through a pre-feasibility study that'll be done Q1, and we're also drill testing 2 of our regional targets that's more copper focused, but if we hit on those targets, I think Barranquilla goes from a tier 1 asset to a world-class mining district, especially if we find the porphyry associated with the carbonate replacement deposit, which is our main ore body right now. The last drill hole that we hit to the east was 151 meters of 1.12% copper with 290 grams of silver and 7% manganese. So that was equivalent to 150 meters of 7% copper. So that's a big hole. We're following up on that in about 2 months. And we're drilling our Skarn target, which is about 2.5 miles away from the main ore body. And we're hitting up to 2% of copper at surface, through surface sampling. So we're going to have lots of news flow on that.
All right. Andrew?
In terms of what we're doing, I think the biggest fundamental re-rate we'll be staring down as a company, at least from a market value perspective, will be when we get our permits in place, which those dominoes are already starting to fall. We're well on track to have everything we need by certainly this time next year, but I'm even thinking potentially by the end of this year. We're focused, we get this fully permitted, high-grade, low-cost, high-margin assets permitted in the continental U.S. Not only does that put like the mother of all targets on our back, but it also means game on for breaking ground on this. This year we're fundamentally building out the undercarriage of the company, hiring. We've got a search going on right now to bring on, truly world-class mine builder to develop this thing. We're building out our finance platform. We're building out our board. This is a company that's gearing up to realize that potential that's laid out in that PEA that we just released about a month ago. I've been with this since probably $500,000 market cap and 3 cents. Today we're 500 million market cap. And with the production profile we're looking at, 7-8 million ounces a year at under $20 cash costs. If I don't screw this up and you've got a supportive gold and silver environment like we have right now, this thing could be $4 or $5 billion market cap. And we're just focused on realizing that. So the biggest re-rate, get this permitted and start working our way underground. So if we've got contractors in site by, say, summer of next year, take us 6 months to wrap down into the test mine area. That's when we can start stacking tons. We can start doing bulk samples. And really the only decision at that point, while we potentially look at offtake or toll milling scenarios, is to build the mill and surface infrastructure. By 2030, that's realistic to have everything built and ramping up to that nameplate capacity. But we could have revenue coming in the door, at least in a small scale, by mid-2028 once we're underground on this thing. So, it's come a long way from first drill hole to permits to engineers instead of just geologists. Different conversations, but. This is where the rubber hits the road. There's truly nothing like this in the continental U.S. right now that's moving as quick and assuredly as we are.
Shad, there's one thing I will add, and it kind of dovetails into what Andrew just said. At $75 silver, if your all-in sustaining cost to produce that ounce of silver is around the $20 mark or a little bit under, you should produce results that rival what the tech companies produced at their peak. There's going to be a lot of money. This is robust, and I have not seen anything like it in my career, which is now 30 years.
Yeah, I've only been following the sector for about 15, 16 years. I've never seen margins this fat. These are the fattest margins we've ever seen. Not the fartest, the fattest. But let's talk about defense and offense, because that's a great point, Mike. So let's talk about what happens if silver crashes back to 30. What happens if silver goes to 100? The metal sensitivities of your project, what does that look like on an economic basis? And a lot of times people do the studies at a much more conservative price, a consensus price, a 3-year trailing price. If we use a 3-year trailing price, we're back in the Stone Ages. So yeah. What does it look like at spot? What's it look like in a defense? And what's it look like offense? And we'll start with you, Mike.
Thank you. I think we could stress test down to $20 silver. I know when I initially put the company together, that was the goal, because silver in most of my career was between $10 and $16. So It was, okay, when silver was 30, will it work at 20? The answer is yes. Now, having said that, we haven't updated our numbers because we're doing the pre-feasibility and there's been a lot of inflation in the industry. But I think it'll be around that. I will also say this, and this I'm going to talk to the industry now. There's probably 2,000 companies like us, Australia and Canada. There's not 2,000 good junior mining companies. There's probably 200, 10%. But the secret is there's not 200 good CEOs. So you need to find the right management teams that in bad times can navigate through that storm. But I'd like to think we're not going to be facing it, but if we do, we're capable.
What about the upside? What if it goes to 100? What if Don Durette's happy and at 200? What if it goes to Eric Sprott's 300 or 400? That's pie in the sky, but what happens how about just at spot? Was at 75 how you look?
Well, we're discussing what are we going to use next year on our PFS. We're going to use 45. So I know the numbers at 45, they're robust. At 75, they're outstanding, and I think everyone on this podium would agree with that. At 100, they're silly.
Yeah.
Right, so I try not to think about that, but as I say, I actually more focus going the other way. What if silver has a momentary dip when it goes, say below 30 again? Do you still have a project? And in our case, the answer is yes.
Andrew, why don't you feel that too? Defense, what happens if silver does go lower? And then what do you look like at spot prices? And are you guys fairly valued currently for $75 silver?
What do I look like? I've gotten a lot more attractive to women when silver hit $100. So it seems at least.
Silver diggers.
Yeah, exactly. There's a lot of those. Well, listen, I can speak to this because, we just put out fresh economics on our project just last month. So our base case was done at $31 silver. And at that, our project had a after-tax MPV of about $440 million US. At $67 silver, which was our upside, it goes up to about $1.55 billion US. So at $31 silver, we had a 28% after-tax IRR, and through life of mine, I think generating something like $778 million in cash flow. And it pains me to say that $112 million goes to the government from that too, on the other side in terms of tax revenue, which is going to be a boon for Nevada. I'm not even sure what the after-tax cash flow would be at the upside case, but as Mike said, you want an asset, the marginal assets, the ones that are the billions of ounces, but they have the grade profile of salt water, and they're really dependent on like oil and gas prices, energy prices. Like those resources can go from 1 billion to 0 in terms of economic ounces like that. With high grade stories like ours, they work in any pricing environment, right? They say grade is king. Obviously metallurgy is key too. And there's, a whole bunch of other factors that go into it, geometry, all that sort of things in terms of deposits. But you want something that works in any pricing environment. And that's what the high-grade stories bring to the table. Our project will work at sub $30 silver, but it looks really, 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 really good up here.
Nice. And Mark, defense, offense, how's the product? You're pulling it out of the ground now, so what are you insulated to, and how do you look at $75 silver?
Yeah, it'll be a little different. I think at $30 silver, nobody will be here, so nobody will want to talk to me anyways. But, we've, as you say, we're producing right now. We have $50 million US on the balance sheet. I need to deploy $20 million to restart Cusi. These are assets that were in production as recently as 2023. And then to ramp up at La Negra, I need about another $15 million US to ramp them up. So I got very limited capital I need to deploy, very near term to cash flows. So in terms of like protecting my position, I can do that. We've taken the approach on our restart at Cusi to have a fully baked in AISC. It's $26.75. And I get asked a lot if I can bring that down, and I can. But, where miners got themselves into trouble, or not into trouble, the way they survived in the last decade when silver was $20, was they were not doing the full development, underground development. They weren't setting up proper stoping plans. They were grabbing material anywhere they can. They suffered dilution. So when you look at AISC in our project, we made sure that we have a lot of underground development, making sure we can really get high quality, good grade ore out of the ground and feed the mill properly. So we can survive at $30. I think the key thing is at spot prices today, as I restart Kusi, it will be repaid back before I'm even fully ramped up. And it's got like a 0.6 year payback or something. Minera La Negra is kicking out cash today. We can ramp that up. So I think the downside protection for us is very near term to cash flow, very limited capital deployment, and that's key for us. So we can survive these things. I think on the upside, if you'd look fast forward 12 months with a $50 margin, which is roughly where we sit today with spot prices, we'll be generating $200 million in margin at the assets. And for every $10 increase for every $10 increase in silver, that would increase our cash flows by $50 million annually. So, the upside looks fantastic. If we run up higher than this, it's unbelievable. And I think at spot prices today, we're going to be an immensely profitable company.
Well, all three of these companies have to make forward-looking statements, but I don't really have to as much. So I'm going to go ahead and say that at $75 silver, I think they're all criminally undervalued right now. They should be valued much higher. And I would make the point that when we saw the big run at the end of last year and in January, and when we saw it shoot up into the 80s, 90s, and we were just at $90 futures just 2 weeks ago, let's not forget that. So these valuations did not keep up with the rise in the metals prices. And the company's slide decks can't keep up with it in their metals assumptions and their metal sensitivity tables. So sometimes when things get moving too quickly, it's hard for investors to keep up with the valuation. So I think there's a lot of dormant value proposition still hiding in all of these projects. Final jeopardy here, though. You guys all are investors as well. So if you were going to invest in other silver companies, or if you have investments in other silver companies, what are one or two or maybe three companies that you also like? Andrew, I'll start with you.
Yeah, no, that's a good question. I actually bought some Silverco the other day. So it's very few, new names, and there are very few actual silver primary companies out there and new producers that might be underexposed. So I like that, and I followed Aftermath for a hell of a long time. And Eric speaks very fondly of that, obviously. At the end of the day, I'm a chef that eats his own cooking. So, the previous panel was talking about like net worths and stocks. I mean, this is, I came in all in on Blackrock, and I'm a bit of a control freak. So, I'm, I'd say 105% of my net worth is involved in this because, you got the families in there too and all of that. I like production. Anyone producing right now, without any real hiccups, they're going to be minting absolute cash, and that isn't reflected in the trading yet.
You have any other silver positions, Mike?
I own both of these companies on the stage
Oh, wow.
with me. So
This was not planned, but they all own each other.
there's so few of us, right?
Yeah.
I like Abra, the guys in
Yeah.
Argentina. I think that's a tremendous deposit with a great management team. And the one in Monaco or Morocco, Aya.
Aya?
Yeah, that is a tier 1 silver asset. So those are my big silver positions. But, like Andrew, I own a lot of my own stock.
Yeah. Mark?
Similar, own 3 companies that are all up here. Not surprised, but the point, there's like maybe 15 real silver companies in the silver space. It's unbelievable. You own the gold, and there's thousands of projects and companies, but there's hundreds of good projects and good management teams. So you get a pretty limited space, limited opportunities in the silver space. That's an opportunity. It's also a challenge, but I'm a big believer the team can really make these things work. Obviously, $75, $80 silver makes most things work, but to get real value and as you look forward, one of the things Silverco is unique. We went public in October of last year. We're still relatively unknown. So I do think Silverco is still going through a catch-up trade relative to our peers. And it's a real opportunity. It won't last forever. So that one, in addition to these two guys, I like assets that are near production or have had close production. So Silver Mountain is one that I think has a good opportunity that's still undervalued. Another one close to these guys, Silver One, is a former producer. has some upside opportunity. I think probably not recognized in the market, but the top three here are sitting on this stage. So
I had no idea that they all would own each other. This is amazing. So we put together a good panel. I hope you guys enjoyed it. Let's give the panelists a round of applause.